Hi, everybody. It is Thursday evening, about a few minutes before 6, and this is your closing comment for today, the 5th of May. And I'm going to make it abbreviated. I have left a link. I will leave a link in the description here so that you can look at the special edition daily note. I posted it in our Discord room a little after the close, and I think it's important enough for you to read. Okay, so we started the day with crappy numbers. The claims numbers were okay, up a little in the initial claims, down a little in the continuing claims, but productivity and unit labor costs were horrendous. Productivity was down 7.5% versus 5.2% expected, and unit labor costs were up a whopping 11.6%. That is, if not the highest, the second highest in history. Um, and the markets, as you probably know by now, were absolutely horrendous. The Dow was down 1,300 and change at the low. It finished down 1,063 or 3.1%. The Nasdaq was down well over 700, finished down 647 or 5%. S&P down 3.6%, 153. Even the little Russell was down 78, 77, 4%, and the Dow Jones transports were the best actor today, down only 450 or 2.9%. Advanced declines were 8 to 1 on the downside on the NYSE and just under 4 to 1 on the NASDAQ. Um, this is a very tough market. And you really need to read tonight's note, which is why I'm making it available to everyone, subscribers and non subscribers alike. These moves are dramatic, and I know that we're desensitized a bit because of the past activity, but they are still extreme, and there is an underlying problem here, and it's the valuation. All of these stocks got way ahead of themselves. When you see the note, you'll see my comments on today's batch of disasters: Shopify, Etsy, um, eBay. All of these things are basically consumer oriented. And, we keep on hearing about how never short the American consumer. Well, these are areas where the American consumer is, and they're doing incredibly poorly. Um, and so that really concerns me. I've been concerned, as everyone knows, since October and November, where every week in the weekly market insights, I talked about how you should ignore the fact that we were making new highs because the underlying market was not really. And there were a lot of stocks that were well overpriced, and a lot of companies actually that probably shouldn't even exist. The only reason they did, with no path to profit whatsoever, was because money was free. Well, money's no longer free. It comes with a price, and that price is going up every day. So, unless they want to continue to fuel inflation, um, companies that make consumer goods, paper, anything really, unless they can pass on those gains and fuel inflation, their other alternative is to lower their margins, which lowers their earnings, which increases the PE. These are important issues, and I know it seems like it might be kind of late, frankly, with the AAII numbers that we'll publish shortly. There are still twice as many bears as bulls. That is a contrary indicator. I would say that tomorrow could have a down opening and an up close. On the other hand, if it doesn't, Monday could be October 87. There may or may not be a fund or a firm with big positions that require liquidation, but I will tell you, liquidation was really obvious, and it wasn't just in big name stocks. It was in cattle, down, cotton, down the limit, coffee, down, lumber, down. Um, Bitcoin down 3,630. That's 9.2%. Same situation with Ethereum. All of the currencies lower, all across the bond yield curve, all dramatically lower. The 30-year bond, riskless, today was down almost 3 full points, 2 and 28/32. And in fact, it had been lower by another half a point. So these are all things that really bear watching. I know that we're going to have a rally, but the point of my daily note tonight is really more about where we actually are in the process. And, maybe the market bottoms Tuesday. I don't know. But I will tell you that once the trend is identified, and it is clearly a bear market, once the trend is qualified and quantified, it's really foolish to go against it. Um, Good stocks, bad stocks, when the market's down like this, they all go down. Doesn't matter. It just doesn't happen. So I will say also that I talked to Dennis after the close. As I mentioned this morning, he's up 57%. He got long the gold here right at the close. Of course, the advantage that he has is that it's right about now, this market is reopening. He's using a stop under the low of the day. So he's basically in a trade that has $2 worth of risk and really an unlimited upside. So there you go, folks. I hope that you will read that special edition daily note, and I'll be back in the morning. Tomorrow, of course, we have the employment numbers and unemployment rate. We also have a couple of more of inflation measures. So I'll be back in